So it is Wednesday, we are the 27th of May, which explains the fan. Today, Iran has announced that they fully commit to restore the number of commercial ships through the Strait of Hormuz to pre-war level within 30 days. So it's really great for many reasons. First, because oil is going back at lower prices. Second, because it means inflation is not going to skyrocket. Third, because the Fed will probably not have to hike, at least for this year. It's also great because 30 days is really a short amount of time, and really the market couldn't have guessed that it will be in such a small amount of time. And also, obviously, it's really great because war is bad. Now, if you paid attention to the market, you've probably noticed some very odd movements, especially, for example, on the S&P 500, but also on oil or on the DXY index, which is the index for the US dollar. So first, S&P has reacted positively to the news, but then proceeded to dump and even consider that prior level, it was just before the speech, like a resistance. And so a lot of successful traders usually talk about market manipulation and how market makers are trying to hit the stop loss of retail traders with their $30 position to create somewhat liquidity to a hypothetical whale that would be worth multiple billions of dollars. The story sounds fun, but it's actually what a lot of people think, and it's completely false, and I'm going to explain to you how it actually works. So the reality behind it is very different from what you think. First, you have to understand the concept of pricing. So market always tries to predict what is going to happen. So we say this is the market pricing in a news. So even before you have, for example, data, usually the market will move before this data, considering what it thinks this data will be. So if they think the data will be awful, you'll see the market probably react to it before it even is released. So usually we say that more positive data, so data that are usually optimistic, tends to move the market slower, while negative, very scary events or data tends to really move the market pretty fast, pretty aggressively. So now what could happen if, for example, a data that was correctly priced in by the market is released and is exactly how the market anticipated this data to be? Well, what we are going to see is a particular movement that is called sell the news. Typically, there is a very famous sentence, which is buy the rumor and sell the fact. So here, if we zoom out on the price, we can actually see that Trump over the weekend mentioned that there was going to be a deal with Iran, and market had really time to price in that data. So understanding that dynamic of the market is really something important. For a trader or even an investor, it's really going to help you understand how it works and where you could potentially find your edge. It really is important because it's actually how the market works. It's how the market moves. Sorry for the noise behind. Now, there's also a second factor that also plays a huge role. It's called positioning. I'm probably going to talk about that in another video, but for now, that's it. You really understand one of the main reasons why market moves by the end of the day is really because people are always trying to predict what is going to happen.